everybody, welcome to Trading the Close. My name is Gareth Soloway, Chief Market Strategist here at VerifiedInvesting.com. We're going to go over the technicals on the chart. Big sell-off today. This morning in the game plan, we talked about, okay, markets are opening up again, just like they did yesterday. Yesterday, they sold off in the second half of the day. They did not go negative. Today, totally different. We opened higher, and we just went down. Down we went. And again, markets are deep in the red. The reversal on Nvidia, I gave you guys a level in the game plan this morning to short it at 153. That was the key level. We'll look at that in just a second. Holy cow, I saw some comments on the YouTube video saying, hey, I did that with puts. I made so much money. That's amazing, folks. Glad to hear it. That is awesome on that trade. Bitcoin's in free fall. We talked about how it was still within that megaphone pattern. Therefore, it was really no bias. You know, a lot of people were jumping on the bull bandwagon, and I said, hey, listen, you can jump on that bandwagon. I'm not going to join you until it breaks a key technical point. So the probabilities tell me to jump on that bandwagon, and we certainly didn't. Now you see the drop today back to the 97 to 96,000 range. All right, so we'll go over all this stuff, but let's start out with what the markets are showing us today. The Dow Jones Industrial Average down 236 points, just over 0.5%. The big fall is occurring in the NASDAQ, down over 2% today. A lot of this is those mega cap tech. Look at the heat map right here, down 6% on Nvidia today. That is a massive fall on a $3.7 trillion company. Again, Apple down 1.5%, Microsoft 1.5%, Google's down 1%, Amazon's down 2.6% on the day. So this is a driven decline, I should say, on the back of the big cap technology stocks. Now the S&P is right in the middle, down 1.25%. So you can see the Nasdaq's down 2.14, the Dow is down only 0.55. This is smack in the middle, as it usually is, as it's a combination of those other two indexes. Oil today, after a nice reversal day, it is bouncing a little bit, maybe looked at as a little bit of a safe haven, right? So money's coming out of big cap tech, rotating into a little bit of the oil trade. But again, we've hit that $75 level. That right now is standing out to me as a technical resistance until it's proven otherwise. Gold today, a little bit of a safety trade here too, right? I mean, when people are running from risk, crypto, whether it's stocks like the Nvidia trade, where is that money or some of that money going? It's going to go into gold. Gold miners today are also outperforming while pretty much everything else is on the downside. And lastly, Bitcoin right here, down 5.5%, down $5,562 at 96,717 after just touching 102 and piercing 102, I believe, just yesterday. So that is a big time drop here, folks, on Bitcoin. We'll take a look at that chart. Next up, here's your intraday chart on the S&P. Now, the reason I'm bringing this up to you guys is, again, this was yesterday's gap up. It was a great gap up. The markets ground higher, and then all of a sudden, they just continued to get sold into the end of the day. Still a net positive day. It was a nice, solid day. Again, the S&P was up a little over 0.5%, but it was up 1.6% earlier in the day yesterday. So that's a big reversal, over 1% to the downside from those highs. Taking a look at today, again, they got the markets to open up higher, but it didn't last long. Yesterday, at least, it lasted the first half of the day. Today, it was just down and then a dribble lower here into the end of the day with, again, an over 1% drop on the S&P 500. All right, so we definitely see that continued selling, folks. I've been raising the alarm bells for the last 2 to 3 weeks. We've been seeing these opens higher, and then almost every single day, we've been seeing selling pressure at some point in the day, usually in the early portions of the day, down, which, again, institutional unloading. I know people think I'm crazy when I'm talking about this, folks. I've worked with hedge funds. I've been involved in running hedge funds, all of these type of things. And again, I can tell you, folks, this is the mindset. We were just talking in the live day trading room about stop loss hunting. How, again, you know, investors are trained to say, okay, put your stop right here. And the algorithms literally be like, oh, look, there's a bunch of people that put stops right here. Let's go run their stop, take their shares, and then we'll push it in the direction they were hoping for. But now we own their shares. This stuff happens, folks. This stuff happens, and I'm here to divulge it to you. All right. Let's go to the daily charts here. If we take a look at the SPY daily chart, we can see, and I'm right on the monthly here, but this is what we were talking about yesterday, right? So we had the head and shoulders pattern, and I'll jump over to the big board right here. We have the head and shoulders pattern. We had the bounce yesterday and the previous day. This is still fully intact head and shoulder, right? There it is. There it is, right? Now, the only difference is we had the bounce yesterday and the day before, and that just was creating what we would call sideways chop, an upside down cup and handle pattern. You see that pattern? So a lot of people know the classic cup and handle pattern. So it's kind of a drop in the market or in a stock. It comes back up, and then you get the bull flag. That's really what a handle is. It's a bull flag. In reverse, we have this with sideways chop here. And I said this morning, I said it yesterday, the path of least resistance, if you looked at 100 of these setups, about 80 of them would fall to the downside. Now, 80 doesn't mean 100%, right? That's 80%. So there's always a chance that a pattern can fail. And that's important for those of you out there that are new. Understand that technical analysis and data analysis is a game of probabilities, okay? So the idea being is that you're never going to get 100% odds. This just doesn't happen in this game. I've never met a trader that's never had a loss. Absolutely not. The idea is you want to get them as high as you can. And so for us, if we play 80% odds in the casino, you'd play in that casino every single day, and ultimately you'd make money, right? And I think that's the key here. All right, so again, choppy sideways action. The key we're watching on the S&P is right here, right? So right at this level. Does this level break in the coming days? We'll have to see. One of the catalysts to the downside today, there's no doubt about it, the downside in the market, is that yields continue to go up. Yields, again, folks, the 10-year yield nearing 4.7%. I've been eyeing that 5% target level. In fact, we got to look at this chart on the 10-year yield because it's just too powerful to ignore. Let me bring it up right now for you guys. All right, so if we go to our bigger time frame, look, I already had it annotated because I've talked about it with you guys so many times before, but basically what we have here is a chart on the 10-year yield that to me continues to signal we're going to 5%. Now, it's not that far away anymore, right? You have the upsloping trend line. Here's your high pivot, your double top. So you have this upsloping trend line. Look at how price was chopping right here and then broke down. Now, there's a tendency when you have a trend line and you're chopping and you break down, you always, not always, but a good chunk of the time, 70, 80% of the time, you go back to what's called the scene of the crime. That's your breakdown level. In this case, the scene of the crime is this, right? This was your upsloping line, which you broke. Scene of the crime would be right there. It's also coordinated with the double top. So for me as a technician, I'm saying, okay, it looks like we're headed to 5%. Once we get to 5%, short the heck out of yields. All right, for me, I'll be buying more and more TLT. TLT is the way I play it. Again, it's not quite the 10-year, but it's very, very close, essentially moves with it. But either way, to me, that's what I'm looking for. Now, is there a chance that we come up here, right? Let's say we come up to this level here and just come down like that. Yeah, I could miss the trade. I've missed a million trades. Heck, today in the trading market, in the markets, in the Apex Live day trading room, I caught 2 trades, 2 winners today. The other guys caught 5 other trades. We went 7 for 7 today, and the trading room was awesome. But did we miss another 30 trades? Yeah, we did. It's just the nature of trading. But the beauty is there's always another trade coming around the corner. Yesterday we had 8 or 9, the day before 8 or 9. It's been amazing trading action. I have to say, the more volatility, the more money to be made as a trader and swing trader. Okay. Let's go on to another thing here as we go into the charts. Micron today did pop up, but it's reversed a lot of those gains. Nvidia is really the one we got to talk. Oh, that is a nasty chart. Oh, goodness. All right, so Nvidia, guys, I gave you guys this level this morning in the game plan. I said short Nvidia at this level. Why did I have this level? Okay, well, you had this high pivot. You connect it to this high pivot. It then pierced, but it never closed above. And then it goes right there. You then have your double top, which is right there. That was at 153 or so. That was basically the high of the day on Nvidia. What happens? It was, by the way, 3-bar surge too. All right, it's another PPT methodology, price pattern time that I teach in the Winning Trader series. Here's day 1 up, day 2 up, day 3 up, right? So you have a 3-bar surge into a double top, into a trend line also. So you have 3 factors. That's a high probability trade. That's probably 85% success rate. Again, that's pretty much almost as high as you can get, maybe to 90 if you find 4 or 5 factors, but it's right up there. Look at that drop. Now, on a technical basis, the amount of damage that's been done to this chart is immense based on this reversal engulfing candle, right? When you get a candle that's that big from top to bottom and you close at the lows of the day, it does amazing damage psychologically, which plays out in the technicals of the chart. So just be aware, we could get a bounce. There's always a possibility, but in general, you're now looking for further downside. The way that would be negated, and this is important, guys, because remember, every chart, you could have a high probability it goes one way, but if it gets negated, you need to know, because there's always a chance of that happening. If you ever get a daily close above that high from today, which is basically 153, then it's off the table. The bearishness goes away, and it goes and flips back to the bullish side. But as long as you're inside here or lower, this is now the standout candle that controls the destiny or the high probability situation. All right, so that's what I wanted to talk about there. Tesla today drops nicely. Again, I still think that's headed back down to this level here. Apple, again, inching back down. We should still head to 237 to 236. We talked about that target. Let's quickly go to Bitcoin, as I'm sure many people out there are wondering what the latest is on Bitcoin here. Let me take a look. I'm going to bring up the Coinbase chart as it has a lot of the volume there. So here's your Coinbase chart, right? And this is the Coinbase chart on Bitcoin. Now, the kicker here is very simple, and I've tried to keep it so simple for you guys just to obviously know what the levels are. We've talked this level and this level. How many times have I stood here, whether it's trading the close or the game plan, and said, guys, if we don't get through this level or below this level, all this is inside shop. Well, there you have it. So again, yeah, it had a great move up, but did it get through this level? Nope. And then look, now down. Now you have this as support, and same thing on the downside. If it doesn't get through this level, it doesn't really matter. It could just continue to go like this for a while. Now, eventually, do we think one direction is going to break? Yes, eventually one will break, and then we'll know which direction is most likely going to be the next big move. And I want to be clear on that. When you confirm, if you confirm below here or above here, you should get a big move in response. But until then, this is all white noise. It's just chop. And so you can't, there's so many people out there, like when Bitcoin rallied yesterday or even the last few days, oh, here it goes, here it goes. I mean, I understand the emotion behind it, but that's also what I work so hard to teach you guys not to pay attention to. Don't let the emotion get you. Look at the chart. The chart is your best indicator. It's your fairest indicator. It doesn't have a bias. It is what it is. We have to remember that and let that be the dictator, not our own emotions, our hopes, our dreams, etc. All right. Next up, let's take a look here, guys, at gold. Gold today did have a nice little bounce. Safety trade, as we know, wasn't up a lot, but again, holding steady inside of what we would call a wedge pattern. So which way does it break? That's going to be the determining factor there. Silver inched up, but gave up most of its gains again today. It is a little bit above this level, so maybe that tells us it could go up here. I don't really have a great read. I would still say the net is bearish on silver. Oil today retraced a little bit of that reversal, but again, hasn't gotten through 75 yet. And again, same thing on the downside. We're now watching this 73 to 72.50 line for any sort of bigger breakdown there. And then lastly, natural gas reversing that bounce yesterday, coming right back into the parallel here. I would not be a buyer here. At the same time, I wouldn't go short either. It's just let it do its thing, let it form some sort of high proximity probability pattern, and then we can talk about a trade. But as of now, that's really all that she wrote at this point. But the point here again is that the breadcrumbs, the market will give you breadcrumbs. And I always use that term breadcrumbs because it's like dropping them and then we got to follow them, or a new piece of the puzzle. The signals have been there, the breadth, market breadth, all of these signals. You see people get so bullish after a day or two of upside, yet you look at the internals of the market and you're like, wow, most of that upside was the semiconductors, all right, but nothing else was really, these different things. You can't let that get you overexcited. You tune into CNBC, they've got their pom-poms out, they're jumping all around on a rally day. Don't let that influence you, just like you shouldn't go to X or to other social media platforms and be like, wow, look at all these people screaming that Bitcoin's going to be at 250,000 by, mid-year. Don't let that influence you. The charts. That's what verified investing is all about. Charts and data, not the BS, not the nonsense, not the narratives. Because again, I found this the hard way. And listen, I gave up a ton of money in my early career, getting swept up in the emotion of it, fighting things, doing this and hoping for that. It doesn't matter. The markets don't care. All the markets are giving us is the chart to read. If we read the chart, we won't win all the time, but we can win 80% of the time or so doing it right. And that's enough to make you a lot of money in the course of your trading and investing career. All right, enough from me today. My sermon is over. You guys have a great one as always. I will talk to you tomorrow. Take care.